Stocks on Wall Street staging a modest rally Wednesday. Nasdaq leading the way, helping power that index higher. Stay-at-home stocks. Well, let's take a closer look at that segment. We're joined by Brett Sifling of Gerber, Kawasaki in Santa Monica, California. Welcome again, Brett. So stocks, before we get to the stay-at-home stocks, stocks today, they seem, again, rather immune to the rise in coronavirus cases, 60,000 new cases in the U.S. And yet at the same time, gold prices are rallying today. It's up past $1,800 an ounce. So are investors trying to play it both ways?
Yeah, it does kind of seem that way, Fred. It's a little bit of a mixed market. You have just this amazing momentum behind equities in the U.S., but you also have, the crosswinds of all of these concerns, whether it's the coronavirus or just political unrest in general. It's definitely an interesting time to be an investor.
Stay-at-home stocks, a lot of them have really gone up a lot. I was looking at stocks at Zoom. I think that's practically quadrupled this year. Make the case, you're still bullish on stay-at-home stocks, even with stocks at these price levels.
Yeah, I came on your show a little while ago and was talking about video games as a major theme of ours, and it still is. One company specifically, Activision, has just been on a tear. They've got this amazing hit, Call of Duty Warzone. On mobile, it's amassed to 250 million players. They've got over 60 million players already since the start on console, which actually outpaced, the fan favorite Fortnite for a while. So it's been an amazing pick. They've most importantly got a diversified business. So they've got the mobile, King unit, which also has the top 10 Candy Crush as well as the console games and PC games, and even Blizzard is releasing content. It's a company that has actually stepped up and decided to produce content instead of delaying the names like a lot of the other video game companies have.
Activision preferred over Take-Two Interactive?
We do like both of the companies, but I would prefer Activision just because they do have more of a diversified base of games and the multiple revenue streams rather than Take-Two's limited number of titles.
Another one on your list is Netflix. I was looking at the numbers. The stock's up 52% so far this year, and the PE an astronomical over 100. You still think there's more mileage for this stock this year?
Yeah, I mean, Netflix is expensive. There's no way of getting around it, but it's been expensive, pretty much the entire time since its IPO. And I mean, they're really just in a golden era of where their stock can be and where their company can be. They're not spending money on shows, but yet they have this content lineup that is just astounding, and it's really kept people on the platform. It's extremely sticky. People aren't canceling their Netflix, even if more people are signing up. And so it's something that's just going to continue to grow in this golden age for them.
Even with Disney Plus trying to challenge them, especially with Hamilton last weekend.
Yeah, Disney Plus is also a favorite of mine. Obviously, Disney has its struggles right now with the theme parks being their cash cow, but Disney Plus is the driving force for them. And, it's something that we also like, this streaming area. And, Disney Plus had these amazing numbers with Hamilton as well.
So with the rise in coronavirus cases, do you see stay-at-home just accelerating further from these levels as a group, the way it trades?
Yeah, we've got this, second kind of wave coming towards us right now, and businesses are starting to lock back down. People are beginning to be more cautious again when they thought that this was over just a few weeks ago. So I do think that the stay-at-home theme is here to stay, and that we'll continue to see the digitalization of the economy and these stocks moving higher.
All right, thanks, Brett, for your stock thoughts. Our thanks to Brett Sifling of Gerber, Kawasaki in Santa Monica. I'm Fred Katayama in New York. This is Reuters.